Hello everybody. Today we're going to talk about the BVQ matrix, and BVQ stands for base versus cross. This is what the BVQ matrix looks like. It's the right window on the left side. The BVQ matrix data is pulled from the currency matrix, which is why it's over here on the left. I'll explain that in just a second. The important part of the BVQ matrix to understand, and this is taken right from the owner's manual, so if you need to reference this, you can find it there. But every currency pair has a base component and a quote component. This relationship is referred to as a cross in the Forex currency world. So you're trading one currency against another, right? And the base currency is always on the left and the quote currency is always on the right. This relationship is very important to understand when you're trading Forex currencies. The part that's really hard for some traders to understand and get the hang of is how this relationship affects the currency pair. And let me go through this really quick example from the owner's manual to explain. If the base side of the currency is going up, that's going to send the pair up. It's going to increase the value, the overall value of the pair. If the base value is going down, it's going to decrease the overall value of the pair. If the quote side of the currency pair is going up, that's actually going to send the pair down. Think of a teeter-totter, right? A little line going across here. If it's going up, the left side is pushing down, so it's sending that currency pair down. If the quote side is actually losing value or going down, it actually sends the currency pair up. So once you start to understand the relationship between the base and the quote and how it moves the currency pair around, the BVQ matrix will start to make a little more sense. I'll explain that in just a second. Two last examples. If both the base and the quote are increasing in value, that's when you get these sideways channels in the market. And if one is slightly stronger than the other, you might get like an ascending or descending channel, right? And same thing in the inverse. If both currencies are losing value, both the base and the quote, you'll get a channel, either descending or ascending or just kind of sideways. Right? So that's kind of the relationship there. This inverse relationship between the base and the quote is hard for some people to sort of get their head around when they're watching the currency matrix. And sometimes it's just too much noise as well. You know, there's a lot of lines, a lot of colors over here. Once you watch the currency matrix for a few weeks, you can just look at it and pick things out really quickly. But for beginners, we learned that a lot of traders have a hard time getting their head around, especially new traders, this sort of inverse relationship. So what we did is we created the BVQ matrix. And with the base and the quote relationships, we inverted the quote values, meaning if the line is going up, it's actually strengthening the currency pair. Or if the line is going down, on the quote side, here, let me get rid of the base side. So these are just the quote values of each currency pair. So the right side, so for here, it's the USD, USD, JPY, you know, CAD, JPY again, the pound, Swissy, right? You get the idea. It's just the quote side. And so like for the pound example, this is pushing down. It's negative minus 0.4, right? This is actually weakening the currency pair. So the relationship between the quote on the BVQ matrix is directly reflected. Over here, though, if we turn the pound off over here, or turn everything off but the pound rather, you can see that it's actually quite strong. You think, oh, that doesn't make any sense because it's, you know, it should be up. Well, remember, we inverted the value based on whether or not it's in the base of the quote. If I turn the base back on, all the currency pairs where the pound shows up in the base, it's reflecting correctly. It's pushing up because it's showing you that it's pushing that pair up. But for the euro pound, it's actually pushing this pair to the downside. So that's very important to understand. The formula for the BVQ matrix is just a weighted average of all 5 time frames from the currency matrix dashboard. I'll say that one more time. The values displayed over here in the BVQ matrix are a weighted average of all 5 time frames from the currency matrix dashboard. So if you're looking at these, if all you have is this open and you're trying to decide, okay, I can tell it's strong, but how strong is it? Well, the BVQ matrix will tell you it is 5.1 strong to the upside, right? Or in relationship to the euro pound, it's actually negative 5.1. So it's dragging this pair down and it's pushing this pair up, right? Hopefully that kind of makes sense now. And you can tell a lot of these others, and this is very typical of a Sunday open. I'm recording this Sunday evening, which is the Monday open in most parts of the world. Usually we have pretty nominal values at the open of a week, unless there was a huge gap over the weekend, which this weekend that did not occur. So, and then you'll start to see these currency pairs kind of push up in value. I get asked a lot, how do you get the data for your currency matrix? A lot of people have guessed, I've heard lots of guesses over the years. It's moving averages, it's RSIs, it's actually a lot more complicated than that. All of our tools in one form or another are measuring parabolic price movement, average true range price movement, like if is the average true range sliding to the upside, to the downside, right? Tick volume and tick gap volume. All of our tools measure those four components of a price in a currency pair. And we do that for every tool is a little bit different in how it attacks that. The currency matrix was designed primarily just to show overall strength or weakness of a particular currency. What we learned over the years, especially as we perfected the formula, is it is really good at identifying arbitrage opportunities in the market. And if you've been using the currency matrix at all, you understand exactly what I'm talking about. When you're up here in the dark green, the prices have to consolidate, they have to retrace. So you're going to want to sell, right, that currency pair against something else. So in the case of the pound dollar, you're probably going to want to look for short opportunities for the pound dollar. For the pound yen, same thing. For the pound Swiss, same thing. For the pound Aussie, same thing. But for the euro pound, you're going to want to look for long opportunities because it's on the quote side of the currency pair, right? Because it's going to be overextended to the downside. So you're going to want to buy this currency pair based on that. And that's that's the very, very basic way to use the currency matrix, but it has a lot more potential, maybe is the right word, I'm not sure, but we have members and users that they have found many different ways to use the currency matrix. I use it to scalp tops and bottoms of markets primarily. That's what I use it for. I released a video last week about how to use the PBT data and the day trader data in the currency matrix dashboard and how to find 20 to 30 pip scalps in the market. That's very effective that way, but there's lots of ways to use it. But the most important thing to understand is the relationship between the currency matrix dashboard and the BVQ matrix dashboard. And again, this is all explained in text form in the owner's manual. When you land on the home page, it looks like this. So it's a really easy way to sort of get to the different sections that you want to talk about or learn about rather. But there's a drop-down menu here for each individual tool. Quick walkthrough there. But that's the basic idea. If you have any questions, feel free to ping me on the forum and I'll be happy to answer them when I post this in the thread over there. But that's the basic idea. Now people will say, well, how do I use this to find trades? And by the way, the gray line, when you check base and quote average, it's just a direct average. So we take the base value and the quote value and we average it. There's no weight there or anything. It's just a direct average, because sometimes when you have an invert like this one right here, right, you've got the yen pushing to the upside, you've got the CAD weak, and what's the overall bias on this currency pair? Well, it's to the downside slightly. This one, it's actually a little more obvious, but you might ask yourself, well, how strong is it, right? Well, it's about 1.5 strong to the upside. So that's what the average is there for. And global trend value, I've talked about that in other videos. It's exactly what it says it is. It is an overall global trend, and it is a soup of math. I don't even know how to explain that one. It's been changed so many times. Even in this last iteration, we perfected it a little bit more. So it's, I don't even remember what the exact formula is anymore for that, but it's very accurate. So that's another thing I'll cover that in another video. But this is the basic idea. You could find trades if all you did was watch this, nothing else. Whenever one of these lines gets up here in the dark green or the dark red, you buy or sell accordingly. Very, very simple. And I've had people ask, well, how do you know when it's going to turn? What's the idea? It'll just turn. So it's a lot of people say, well, I want confirmation before it turns, and I'll cover that in another video. But how to like draw a trend line and make sure that it crosses through the trend line. But the basic idea is it's overextended, it's going to turn. So it's a lot of times, people will say, well, the global trend value got up to 9.7 and it kept going. Oh yeah, because it wasn't maxed out yet. So you want to make sure that these levels are at 9.9 before you try to fade them. And that's basically the biggest key. And I know it's frustrating because a lot of times they won't get to 9.9 and you feel like you missed a trade, but technically you didn't miss a trade. You were just being patient and waiting for the perfect opportunity to short or long a currency pair. The thing that a lot of people figure out really quickly when they're looking at this is they're saying, okay, I get what you're saying here, that the value over here is a weighted average of all 5 values over here. So it's exactly the same on every currency pair, right? It's not unique to each currency pair because the pound has an individual value across all 5 currency pairs. So you might say to yourself, well, that means when the pound is overextended, I could short all 4 of these currency pairs and buy this one. And that is absolutely correct. A lot of people miss that. They sort of miss that relationship between the currency matrix, and they might be looking at just one currency pair and they forget that there's actually multiple currency pairs that you can trade. And you might look at the one that has the best sort of overall extension. And one of the ways I like to do that is, let's say the pound dollar is up here in the dark green, and we're trying to figure out, okay, which one is the best one to trade? Well, I'll come over here and I'll look at the scalping matrix and I'll look at just the PBT data and I'll say, well, the pound yen, and actually this is getting really close to a trade, ironically, but the pound yen is overextended. The PBT value is now pegged. You want to wait for it to get pegged at 9.9, but this is the one I would probably choose out of all 5 currency pairs to fade once this pound level gets up here in the dark green. And these are long-term trades. These are swing trades. These are trades you're going to hold for hours. This isn't a scalping tool. This is a tool to help you catch actual swings in the market. That's why they don't signal all the time, because swings don't happen all the time. They happen on average once, maybe twice a day. So it's a tool that requires a lot of patience, but it's extremely accurate. Again, and I'm rambling a little bit. I wanted to keep this video kind of short, but let me know if you have any questions at all in the forum, and I'll cover another video on how to confirm when prices are rolling over, because a lot of people, they don't want to just blindly fade a market when a tool is overextended. I understand that. It takes a little bit of faith to trust these tools. They do work that well, though. You can actually just fade the market when this is pegged at 9.9. But if you want actual confirmation, I'll cover that in a separate video. So that's it. That is the BVQ matrix in a nutshell, and that's why it was made. It was made to help traders understand, basically, in an organized fashion, what the currency matrix dashboard is doing and how it's analyzing the market. So I hope you guys find that helpful. Let me know in the forum again if you guys have any questions. Thanks.